All right, let's do some calls here. We're going to start with Exxon today. Price target cut to 131 from 134. Neutral. Mizuho lowered on their weaker chemicals outlook. You have it in the T. You have it personally. Mm-hmm. And you like it a lot.
I like it a lot. I mean, the target is a 20% increase from here. I think Mizuho might have just been a little bit ahead of their skis in terms of where their prior target was. I think this is very simple. Unless you don't want to own energy at all, I think you have to own ExxonMobil. I think it's your first purchase within the energy space. It's diversified across the entire chain that goes into energy production. By the way, the chemicals and products, that's a very small portion. But scale matters here. If energy prices go down, scale is where ExxonMobil is going to still be profitable. And if energy prices go higher, they're going to make money hand over fist. 3.7% dividend yield. They've got a free cash flow yield of about 7%, attractively priced. Again, unless you don't want to own energy, I think you have to own Exxon.
Let me just ask you this real quick.
Yeah.
Because you just painted a scenario in which the stock wins either way.
I did.
Right? But that's not it. That's not how the practical. The world doesn't work that way.
Well,
you just gave me a scenario. Oil goes up, stock great. Oil goes down, stock great. The stock is up like 7.5% over the last year. I'm just saying, like, there's got to be more to the story. I'm sorry.
Yeah. Wait. Slow down, my friend. He didn't ask you. The simple answer here. The simple answer is the starting point matters here. At roughly 14 times earnings, 3.7% dividend yield, and the free cash flow right now is going to be about $33 billion this year. What are they going to do with that? They're going to buy back shares. The share count bumped up when they bought Pioneer. Now they're going to be buying back those shares.
Let me ask you this.
The starting point matters.
What if their arms are twisted into drilling more by the president? However laughable you may think that is, what if that is a part of the equation here? That what was essentially free reign to do whatever you want. You don't have to drill. We don't have any interest in doing that. We'd rather give the money back to shareholders and watch our stocks go up.
I'm going to take your question at face value. If that happens, that's bad for the No. If that happens, that's bad for the stock. I don't think that's going to happen. Now, every investor in every name has to make a decision about what they think is going to happen. I would counter this with GM, where I said I think these tariffs are going to happen, and I sold it. If I really thought what you just asked about were going to happen, I would not want to own ExxonMobil here. But I really think a long road to hoe between telling everybody you want to drill, baby, drill, and actually getting ExxonMobil to put drill bits in
the other point of sort of like a no-lose scenario.
Let me address that.
Please.
If the commodity goes down in price, the share price is going down. Period. End of story. So it's not a win-win situation.
Why are you looking at me?
And given the,
I know
because he's annoying me right now, but for not to look at him.
I'm glad to turn the tables for once.
But in the geopolitical landscape that we're in, let me ask you another question. Suppose, with his good friend Putin, we settle the war in Ukraine, and then we take the embargo off Russian oil. What happens then? Chevron's not going up. Exxon's not going up. Okay. They're going down.
What if unicorns start flying from post 9 at the New York Stock Exchange? We can do this scenario analysis all day long.
Let's get back to allocate to energy. We carried no energy exposure into last Friday. We now have the same exposure that you get in the S&P 500 towards energy. 4 names: Diamondback, EOG, Exxon, Jimmy. Entry price matters. And the one I'm most excited about is Baker Hughes. Credit Tony Pasquarello with this. Energy was the only sector during President Trump's first administration that was negative.
All right. I mean, everybody knew that. What do you mean, Tony?
Why
what do you gratuitously? Why are you gratuitously calling out Tony?
Tony sent me.
I mean, Tony, all due respect, but I mean,
Tony sent me the note.
We've said that 1,000 times during the election coverage.
Okay.
So let me take you.
He refreshed my memory yesterday.
So it took you 4 years for Tony's note to realize that energy was down during Trump's administration?
We going to break?
I mean,
Joe, apparently you're annoying him too, but it's only a one-way trade.
Hey, Bryn, just give me something. I want Joe to just squirm a little bit in his chair. Just give me something on Robinhood, which was initiated today at Ray J, which you own. I don't want to go to break yet. I want the camera shot on Joe individually too.
Okay, put it on me.
Can we please do that?
At Robinhood? Is he throwing shade at Robinhood? So like Palantir last year, I think that Robinhood is under-owned and under-followed by analysts. So the Raymond James analyst initiated coverage, right? He initiated coverage. He wants to follow it. It's a neutral for him. But this company is at the crossroads of equity investing, options, and crypto. And I think this company's going to continue to get stronger and stronger. Their earnings come out in 7 days. I think they're going to blow it out of the doors. And so I think this is a stock to continue to watch and a company that's going to continue to gain market share, not only from a Coinbase, but also from the traditional custodians.
All right. Thanks for that.